Hi guys, Vinney Chopra back again with the Apartment Syndication Made Easy sequel to my book, which is the podcast. And as a matter of fact, you guys are getting so many doses every week, maybe 3, 4 times. And thank you so much for liking and sharing and giving great comments and giving us 5-star reviews, because that really means a lot, in getting the rankings and everything. Again, we got a great guest. DJ Kosen is in the line. And TJ, how are you? You're in Dallas, Texas.
I am. I'm doing good, Vinny. Thank you for having me.
Oh, awesome. Awesome. Good to have you. I'm in San Francisco area. I've been living here for over 40 years, actually, and doing business in other states and so on. TJ, let me introduce you, TJ, a little bit. TJ has been in real estate, guys, since 2006. He's seen the crash. The 2007, 8, well, 8, 9, all that, and lived through it and cutting his teeth in, before the big cash. He had 200 plus multifamily units. So we're going to talk about that in Tennessee, how it went into dust or how it's come back. It will be kind of fun to see. Also, TJ's, interesting points are that he's in hoteling. So the ultimate guide in real estate, hoteling and wholesaling is his, multiple markets. And he also invests in California. I want to know where. That's pretty cool. And Texas, and also, of course, Tennessee, which I'm very big on Tennessee right now, in Nashville, Knoxville, things like that. So welcome, TJ. How are you?
Oh, doing great, man. Thanks again for having me on.
Oh, you bet.
It's been a fun journey.
Such a pleasure. Share with me, a little bit how did you get into real estate, and a little bit about your background, and so that audience can get to know you. Yeah.
Yeah, man. Dude, I did it all wrong. So if you're going to pick a time to get in and you want to get into multifamily, maybe don't do it in 2006, because that was not the smartest thing to do ever. No, that was a lot of fun. I was doing loans. So I was doing loans. I'm from San Diego. Was doing loans out there, a lot of the residential stuff. So I saw kind of firsthand what was happening. And if you've been in California for 40 years, you know as well as I do that California's a market that goes like this when everything else kind of goes like this. So I wasn't really interested in getting into investing in California at the time. I was right out of college. I just wasn't really into it, I guess.
Yeah.
Craziest thing, started looking on LoopNet, started looking all over the internet, started looking for multifamily stuff, and ended up buying my first deal was 112 distressed apartment units in Memphis, Tennessee. So the numbers look pretty juicy. We bought it for $860, something like that, I think. So whatever that is, $7K a unit, something ridiculously cheap.
Wow. Oh, my.
We had about a $15K capital improvement that was anticipated, and our exit ARV was anticipated to be about $30K a unit, somewhere in there. So definitely different 16 years ago than now. I don't even know what that property would be worth now. And it was going great until the entire bottom drops out of the market. And people don't talk about, I guess, cap rates. If you got 100 units and you increase the gross rent by $100, and you just made $1 million.
Yeah.
Well, if you got 100 units and your gross rent goes down by $100, that's a lot more painful. So that was a long time ago, but that was the first deal. And it was a lot. Honestly, it was a lot of fun looking back at it. It was obviously stressful at the time. No one likes losing money when the market bottoms out.
Yes.
But it was, looking back, it was the right thing to do.
Awesome. Then you moved to Dallas. I know Dallas has been on fire. Oh my gosh. Actually, I remember 2008, I wanted to buy in Dallas, in Euless area, in all this and North and all, and nobody will give me loan. Nobody, because I was starting out,
I heard about that in Dallas, being a little tough to get financing. I moved back to San Diego for a couple of years, kind of after that whole thing fell apart, got married and did all the wrong things again. Actually, not exactly, but I got married and then moved to Dallas the same year, bought a house, and we've been kind of rocking and rolling out here. We love the market. It's on fire. If you can make things work in Dallas, then you can probably make things work pretty much anywhere. Maybe not San Francisco, I don't know, but it's a fun market. It's very competitive, but we're pretty good at what we do.
Awesome. So you have been in multifamily all this time then, or did you go into some other places also?
Back and forth. So multifamily, we've done a couple other smaller multifamily deals, just kind of in and out. Right now, we're only actually holding single family apartments. we've done some self-storage. We did some self-storage 2 years ago. That was fun. Made a lot of money on that. And right now we do a pretty high volume and velocity of single family. So do a lot of direct to seller marketing, a lot of in and out deals. So we pick up rentals, maybe 15-20% of our deals turn into rentals. We're not doing a lot of flips because the market's just a little weird for them. We're doing a lot of wholesaling. So that's basically selling, like closing on the deal, cleaning it up a little bit, and then putting it on the market more or less as is. That's actually, I thought that was going to dry up, but that's actually on fire right now. Oh, wow. And then we do a lot of seller financing. So we raise money for offering financing for the property when we go to sell it, source a retail end buyer, and then we either sell the note or sell a piece of the note or keep the note in house to cash flow it. And that's actually about, probably I would say about 30% of our business right now. We have about 30 deals on the board, and that's about 10 or 11 of them.
Oh, wow. So give us, I know that'll be a very good way to kind of teach the audience as to maybe some secrets if you want to share. As I know, I feel like, in Absolutely. Real estate, it's such a big pie. I would love to give my secrets to everybody, which I'm trying to, why not, syndicate big deals? Why not? I mean, I started with one investor. I've got 530 investors, raised over 220 million from them, a lot of good stuff. So tell me, what's your secret sauce?
I think from the company perspective, we like the operations side. We like the building the business side. We like the velocity and the turnover. Yes. And then that obviously has different logistical problems from being in the bigger projects that we, get into and out of here and there, but it's not really our core competency. I think raising money is always, like, cheaper money is always better, right? So when we're looking at the notes that we're selling, on the note sale side, one investor wants to get maybe a 15% annualized ROI on their money from a cash on cash or something like that. Yeah. Maybe another investor, and if the face value of the note is 12-13%, well, now we're going to take a discount on that note. Versus another investor is cool with a 12-13%, so now we're selling the note at par and we're good to go. Versus if we can source money, even better from like an IRA retirement account, same as you guys, you have a different expectation in the marketplace.
Hi, you are listening to Syndication Made Easy podcast. We will be right back after this short break.
Hi, thank you so much. This is Vinney Chopra, and thank you for subscribing to my podcast and YouTube channel and Facebook pages and all the great things, and LinkedIn. Connect with me. I come live to you every Friday at 9 Pacific with Vinney and Bo show. Please also look at that. And also the podcast, which is my Apartment Syndication Made Easy. The book I wrote a couple of years back became international top seller on Amazon International now. And then we like to bring great guests for you every week or twice a week sometime to give you a lot of great knowledge. So please subscribe. You give us 5-star reviews on the iTunes. The better the guests we can bring, and our ranking will go higher also. Thanks again for following us and really getting the most out of it. Please comment, like, share, because we would love to bring better and better material for you.
So maybe those people want a 8-9% ROI. And then if our note is at 12 to 13%, well, now we're actually selling at a premium, or maybe we're keeping a partial of the note, selling, keeping an extra little buffer and making cash flow on it. So what we really like is just the structuring, very, very similar to commercial, I guess. We really like structuring a deal from acquisition to dispo, so that to kind of squeeze it for what we can and like do what we can with the deal. We like it from the deal perspective.
I see. So how do you source these deals? From what I understand, it's a partial wholesaling, right? And you never really renovate, or do you renovate some? Renovate.
Yeah, in the past, probably last year, we were renovating pretty much everything because it was the best market ever for it. Right now, we're renovating, I would say, about 20% of our deals, I think.
I see.
Just because what's really interesting, what we've seen in the marketplace, I thought the fully renovated stuff would keep moving pretty quickly, and the stuff that was semi-distressed would sit. It's actually the opposite. Because now we're bumping into a lot of buyers that want to have some perceived sweat equity when they buy a property, and they're more interested, even if even if we know, they'd be out more money if they were to do all the repairs that we were to do to get it there. Yeah. They perceive that, okay, if we can go paint the property ourselves and maybe put in some carpet, maybe 6 months from now we're going to have 20, 30, 40K worth of equity. So we're trying to cater to that kind of buyer. So we'll buy at a discount. We'll do minor repairs and make the property conventionally financeable, and then stick on the market either as is, or we'll go direct to retail off the MLS. So we build a big internal buyers list from alternative marketing, posting all over the place, just finding buyers and then sell to them. And that's kind of where the seller financing comes in. It's where we structure like, hey, maybe there's a cash price that's here. Maybe there's a seller financing price where we need a little bit more money. And we just kind of structure it that way.
I see. Around Dallas, Fort Worth, like, are you in the north side, east side, west side, or all over? Where do you find these right nuggets or golden,
Oh, no, we'll buy anything around North Texas. Again, we have some rentals in San Diego still, in California.
Okay.
We've tried to do some virtual wholesaling, and to be honest, we're just not the best at it. We like the North Texas market. So my office is in North Dallas. We buy anything inside the Metroplex. I mean, 7 million people, plenty of opportunities here. We'll buy stuff up in the surrounding cities, anything more than about, 20,000 people, something like that. We'll pick up a deal. I don't think I've ever done anything in McAllen. Now you're making me think I should go out there and try to find something multi out there. I should go out there. And
it's a good, it's right border town. We have had a lot of fun there, for the last 4 or 5 years in hotels, of course. And we are looking my partner also owns some multifamily there too, and we are looking at buying 2 really good multifamily over there also. You said about North Dallas, very, my company's housed in, even though I live in California, my LLC and everything, my attorney is from the colony, Mr. Nice. Milton Colgrove. He's one of the best person. I want to shout out to Milton in this podcast because he's been with me 14 to 15 years. And I met him only 4 times having lunch, belly to belly, on the table. And he's just a wonderful person. Milton Colgrove and of course, Greg Meyer, Colgrove and Meyer Company, I think it's called. And they're based in, we were in Carrollton. And then they went over there, Plano, Texas. Actually, no, not Plano. There's another one there. Anyway, but then into Carrollton, and now they moved to Colony. So nice. I'm very familiar. Frisco area, man, it's on fire. What's going on over there?
Frisco's nuts. They haven't quite run out of land yet, so they're still building.
Look at that.
It's going insane. Colony's about 10 minutes that way.
Oh, it is? 15, okay.
First about 15, 20 minutes that way.
Yeah.
So we're kind of right in the middle of it. That's why Sarah and I, that's why we moved out here. We moved out here 8 years ago. And we love the market. We love the people. We love the lifestyle. We love all that stuff. And it's a lot of fun. Frisco's booming. Frisco's absolutely booming. I got some friends that do strip centers up there that are crushing it.
Yes. As a matter of fact, one of my good friends also, they built a medical, a building in Frisco. They bought another one nearby. They wanted me to come partner with them and I might join them, just as a GP or something. But no, that's so great. I think you got there at the right time. And, Dallas is not going anywhere. You're right. The increase in rents are kind of dampening a little bit. Because everything, has cycles and everything. How about any downfall? What do you say with this 2023, which is upon us with the interest rates being higher? It doesn't affect your industry that much or how? In your niche?
So speed into and out of a deal is always important. Yeah. One thing that depends on what you look at in the news, I guess. One thing we saw was we peaked in March, April, May, probably I would say maybe May, June last year. We definitely peaked. And when we're evaluating deals now, we're looking at those deals that sold in May and June, and we sold a lot, by the way, into the spring last year, kind of going up. We saw it softening. So we're like, let's dump a lot of our speculative stuff as quick as we can.
Yes.
And we've settled probably, I would say 10% from the absolute peak. Mm-hmm. And that's not to say that we've had a 10% crash. I would say it's more that there was so much like almost panic buying on the retail side with low interest rates still, with buyers just desperate to get a house, that it was almost like like if you look at a stock market graph, when it just kind of shoots up like that and then kind of goes like that and settles down a little bit, I almost look at it like that. So that, I mean, we were relatively prepared for that. We had maybe 2 deals out of however many we had going at the time that were not as good as we wanted them to be, but we were pretty prepared for that. I think the market, personally, and it's obviously speculation, I think the market tends to hate uncertainty. And I think there was a lot of uncertainty in the summer into the fall with the rising interest rate environment, with uncertainty about how that's going to impact the retail and residential market from, affordability, from supply and demand, from all these different dynamics. A lot of uncertainty about the extent of interest rate rises, how long they're going to keep going, kind of going forward. And I think there's still a level of that uncertainty, but I think at least in our market, I think there's, even if you don't agree with the direction that the Fed's going or with what they're doing, I think there's more certainty about them broadcasting what their intentions are. And I think that loosens up a little bit of, I wouldn't say it drives prices higher, but I think it loosens up more of the velocity of deals turning over. We saw, starting basically from Christmas, we saw a huge uptick in the retail. I think we've sold almost 10 deals this year already. And we saw a huge uptick in the velocity of deals getting picked up on market and off market, pretty much from Christmas until current, where November was relatively flat and stagnant.
I see. And, with the interest rates also, I think with the economy with the jobs, getting cut in the IT industry, mostly Austin is getting hurt and Bay Area and all that, where I am. But you're right. I think I expect, predict, and people are saying they might do another 0.25 twice. And then maybe towards the third or fourth quarter, they might go down in the interest rate. And you're right. It's not going to be as big crash that people were thinking as 2008, 8 and 9 and so forth, but opportunities will be there. You're right. So tell me about hotels. Are you doing anything with hotels or no?
No. It's wholetailing. So
wholetailing.
I
was trying to read it again. I said, let me see, I'll ask TJ if he's into hotels. I'm into hotels.
No, I don't know much about them. No, multifamily and the self-storage is pretty much what I've done on that. And I love those products. I don't know shit about hotels, to be honest with you.
Oh, really? Wow. I love hotels. And there are some great deals that we made a lot of money. I mentioned to you in McAllen, we are looking into Florida market. I just got a Beverly Hills hotel off market yesterday. Nice. So we are looking into that one and, all those things. But, let's talk about maybe towards the end. Of course, the key thing is, how do you build systems? So you are doing many, many deals. Share with our audience, what has taken you from where you were, going over some struggles to now it's streamlined. Kind of take us through that.
So it's, it's all about people, whether it be multifamily that we've, done the stuff in the past with or currently or whatever, or building a business that's, because we're relatively high volume, relatively high velocity. So we keep a good pulse on the market, but it's all about investing in people. It totally is. Where the stuff we bought, our first deal, back in the day, lost, I don't know, a lot of money. But the successful aspect of it was in building the people and empowering people to do their job well, and being compensated for the outcome of the job turning out well, from the property managers to the contractors and subcontractors to even the tenants to a certain extent. You want to give them a place where they're happy to call home. And all of that stuff has always been very successful. Where I think in the past 16 years where I probably struggled the most was when we took a step back and didn't invest in people and invested in more of a hustle mindset, try to do everything ourselves. Like we have to control everything. And that's where we've had the biggest struggle is in terms of building the business, because you can't build a business that way. You can build a lifestyle and you can build a transactional revenue source, but you definitely don't build a business. And, it took a while. You take a big loss. It takes a while to get your mindset right again. But when we start thinking about it, I think what the biggest piece was, I stopped liking talking to sellers. I didn't want to talk to any sellers anymore at all. So just hired an acquisitions guy, closed a lot of deals. We doubled down on our marketing, invested in our marketing. We do a lot of online, a lot of cold calls, that kind of marketing. So double invested in that, and then picked up another acquisitions guy. It's like, oh, that's working pretty good. And it's like, well, shoot, I don't want to manage them personally. Well, now I got to have an ops guy. So now the ops guy has to deal with that. And then, well, now we're getting too many deals to close on ourselves. Well, now we got to get a sales guy to sell stuff. And it's just every time we empower a different piece of the team to go make their own living, make their way, then that's the company just grows by itself. And once in a while, you kind of look around going, oh, crap, we're doing a lot more stuff than I thought we were. But because of that investment, not because we don't have a target. Like, we're not trying to do a certain volume level. We're trying to do good deals that make a lot of sense and a lot of money. And in doing so, every time we reinvest in the team, next thing you know, there's someone else that's showing up to work. It's like, oh man, that guy's going to be busier than, I don't even know how I would live without him. So that's the difference between, how we went that way was taking a multifamily perspective almost to a single family investing model, where if we're renovating 100 apartment units all in one spot, it's really fairly straightforward. We're putting the same paint, the same carpet, the same windows, the same countertops in 100 times. And it's very repetitive. If you're doing one flip, man, you're stressed out because A, if it goes wrong, you're screwed. But B, you got another certain sub-market. You're very niched in on one product. Well, if you're doing 30 deals, well, now you're almost back in like a multifamily like mindset, because now we're focusing on what process gets the velocity of the deals done, and each individual specific deal isn't nearly as important. So it's almost switching back to that mindset of a volume-based, repetitive mindset, and that's where we can start putting the systems and the people in place to do a repetitive job. Because if you're buying everything yourself and selling everything yourself and dropping off tile and renovating and all this other stuff, a lot of people do that and they can make a lot of money. Yeah, but you can never really grow with people or in the business, in my opinion.
So right about it. As you were saying that, TJ, in my company, we were like my wife and my daughter on the top, and then we got 153 people full time, into our whole structure, the regionals and the property managers, like you said, contractors, technicians, all of them. Then the HR person, the accounting VP, and all those are empowering people in their job descriptions and giving them all the leeway to do their job right. You're right. That's how we are able to do, in your case and my case, to be able to grow big, that you could accomplish a lot more. And then you're making a difference in the lives of more residents, more sellers, more contractors, more team members, everybody. Yeah, for sure.
Oh, absolutely.
So what any kind of books you're reading right now, or could you share one or two?
I don't know. I actually read a lot of history books. So,
oh, you do? Wow, my son reads a lot of history books. Yeah,
business. I've read a lot of the business books. I haven't read one for a while. It's been probably over a year since I've read one. One of my favorite. Let's see if it's up here. What was I reading last? Actually, reading a biography on a stock investor called Jesse Livermore. Brilliant guy. He ended up killing himself, so that's hopefully not. Yeah, it kind of sucks, but he made and lost fortunes in the 1907 and the 1929 crashes, and I think he's absolutely brilliant. Obviously, a little probably mentally not entirely balanced.
Yes.
But I think there's a lot of crossover. I tend to learn a lot. I think more, not so much from the business books. I mean, I've read a bunch of them. I've read, Traction, $100 Million Offer, all that stuff. I mean, Robert Kiyosaki probably got me started.
Yeah.
For better or worse, probably along with some of the Donald Trump books, the Art of the Deal stuff, like 15 years ago. But they all tend to say the same thing. I think it's really interesting to kind of dive into what's a fascinating person that did something incredible for his time. And hey, are there takeaways that we can apply maybe in our daily lives from a mindset perspective, from a market understanding perspective, from a conceptualization perspective? I think it's interesting. So yeah, it's Jesse Livermore. Look him up if you haven't. He's
Jesse Livermore.
Fascinating guy. He was one of the richest guys in the world after the 1929 crash. Lost it all, never really recovered, and he did that a couple times. So I don't know what that means.
I'll be done. I always have read and heard that, when people lose, they know the formula. They come back, rise. And then you said he passed away recently, or?
No. He died in the 40s, I think, in the 43 or something like that.
Sure.
No, he was born in 1880 something.
Oh, wow.
Yeah.
Wow. Jesse Livermore. All right.
Fascinating guy.
Hey, how can people reach you? Thank you for sharing some good nuggets. Appreciate that, TJ. Yeah.
No, absolutely. All over Facebook, TJ Kosen, website, tjkosen.com. So you can find my personal stuff on there and anything we got going on. We're in the North Dallas area. We throw meetups probably once a quarter, get 500 or 600 people in a room and talk deals and how things are going. So that's all fun. And would love to connect with anyone in the local market or anyone that's, doing deals worth looking at.
Excellent. Excellent. Hey, I really appreciate your coming on the show, TJ, and God bless you and all the successes, brother. And, we'll see you next time on the next episode. Please be sure to like us and share the episode and, maybe do more wholesaling, right? And also flipping, which is, there's money to be made. And we'll see you next time. Thank you so much. Thank you again, for joining Vinney Chopra this week on this podcast. And please subscribe, share, give comments, and give 5-star rating if you can on iTunes, because that really helps a lot for us to bring great guests. And also iTunes raises our rankings up. And I hope you have been very happy with Vinney Chopra and team who are able to bring great information. If you would like to invest with us, please go ahead and go to vinneychopra.com/invest. Thanks again. God bless you.